Welcome to Everything for Fun again, and our video on the potential returns of investing $10,000 in Apple 10 years ago, and why it could be a good idea to consider investing in the company now. In this video, we'll take a comprehensive look at Apple's stock performance over the past decade, examine the key drivers of the company's growth, and explore what kind of returns an investment of $10,000 made a decade ago might have yielded today. Additionally, we'll discuss the current state of the company and why it could be a good time to invest in Apple. Apple Inc. is one of the most valuable companies in the world and has been a consistently strong performer in the stock market. Since its IPO in 1980, Apple's stock has grown by more than 20,000%. In the past 10 years, the company has seen steady growth in revenue and earnings driven by the success of its iPhone, iPad, and Mac products, as well as its services segment, which includes the App Store, Apple Music, and iCloud. If you had invested $10,000 in Apple 10 years ago, you would have purchased around 140 shares at the stock's price at the time, which was around $71 per share. Over the past decade, Apple's stock has grown by an average of about 15% per year, which is higher than the S&P 500 average of about 9%. With the reinvestment of dividends, your $10,000 investment would be worth around $48,570 today, assuming the stock price remained constant over this period. To give you an example, if you had invested $10,000 in Apple 10 years ago and held on to your shares, you would have received dividends over the years which would have been reinvested to purchase additional shares. If Apple's stock price had remained constant at $71 per share over this period, your investment would have grown to $48,570. However, it's worth noting that stock prices are not constant and can fluctuate widely. In the past 10 years, Apple's stock has had its ups and downs, reaching a high of around $233 per share in 2020 and a low of around $52 per share in 2013. So, depending on when you bought and sold your shares, your returns could be significantly different. Despite the pandemic, Apple's stock has been performing well in 2020, driven by the success of its iPhone, iPad, and Mac products, as well as its services segment, which has continued to grow in popularity. Additionally, the company has a strong balance sheet and a history of generating high levels of cash flow, which allows it to invest in future growth opportunities and return value to shareholders through dividends and share buybacks. Furthermore, Apple has been expanding its services segment, which includes the App Store, Apple Music, iCloud, and the recently announced Apple Fitness Plus and Apple Arcade. These services are expected to drive growth for the company in the coming years. Another reason to consider investing in Apple now is the company's strong position in the technology industry. Apple is at the forefront of technological advancements and has a strong ecosystem of products and services that are used by millions of consumers and businesses worldwide. It's worth noting that investing in individual stocks, including Apple, is always risky, and it's important to conduct thorough research and consult a financial advisor before making any investment decisions. As always, past performance is not indicative of future results. In conclusion, investing $10,000 in Apple 10 years ago could have yielded a significant return on investment. While the past performance is not indicative of future results, the company has a strong track record and potential for future growth. As always, it's important to conduct thorough research and consult a financial advisor before making any investment decisions. Thanks for watching.